Tuesday, May 9th, 2017, Monaco 64, home of alternative economics and contrarian views. So I like to talk about volatility, which is, how much the market moves up and down, and it's measured usually by the VIX. There are other ways to measure volatility with options, but the VIX is the most well-known measure of volatility, in the markets. And there's a story out this morning on Zero Hedge. It says, crushed vol boosts dollar, commodities, futures flat. By futures, they mean the stock market. And it says here, as investors focused on corporate earnings after the French election, while the VIX hovered near its lowest level since 1993. So back then, yours truly had been in the market for about 4 years. And yeah, so it's a long time, 24 years since volatility has been this low, which shows a lot of complacency by investors and speculators. The other thing I've noticed this morning, by the way, it's actually this afternoon because it's 1:15 London time. It is 8:15 Eastern Daylight Time in the US. So yeah, I've noticed the dollar-yen cross, is moving quite a bit in favor of the dollar. The dollar is moving up. We've broken through that 113 level that I talked about in previous videos. We're now at 113.91, so the dollar is up almost 2/3% against the yen, right on the high. And as you probably know by listening to my previous videos about dollar-yen, the carry trade, and gold, that the dollar-yen cross seems to be, and gold seem to be tracking each other. And how are they doing that? Well, as the dollar goes up against the yen, gold versus the dollar goes down, so the price of gold goes down, and vice versa. When the yen rallies or the dollar goes down against the yen, the price of gold versus the dollar goes up. So on April 17th this year, gold made a high for the year at $12.95, and the dollar made a low around 108 against the yen. So right now we're like almost 6 big figures higher in the dollar versus the yen, and that's why gold continues to trade lower. We're at $12.2320, down about $2.80. The low so far today has been $12.22. Silver $16.20, down 3 cents. The range has been $16.14 to $16.33. And the reason why this has got to do with volatility is because the yen is a carry trade currency, which means that investors, speculators, they borrow in yen to take the proceeds and turn it into other assets and other currencies to speculate. And why do they do that? Well, because the Japanese interest rates have been stuck at zero for over 10 years, I think 15 years. The policy of the Bank of Japan is to, to debase their currency, to keep their currency weak, to keep rates at zero, mainly because almost 25 years now, more than 25 years ago, the Japanese stock market, the Nikkei went up to almost 40,000. The housing bubble, there was a housing bubble, real estate bubble in Japan. The royal palace in Japan, the grounds of the royal palace in Tokyo at one point was valued more than all the real estate in California. It was a huge bubble. And then in late '89, that bubble collapsed, popped. And Japan has been in a recession, depression for over a generation, over 25 years. The Japanese, politicians and central bank, they did not allow the Japanese property bubble well, it did collapse. They couldn't help it. You know, the Nikkei has been down as low as I think 7,000 or 8,000. And right now it's back to 20,000, but it's not back to 40,000. But what the Japanese, you know, leaders, you know, political, financial leaders did, they bailed out all the, you know, the zombie banks. That's where that term zombie banks comes from. It was from all the Japanese banks being bailed out. The government also indebted itself. You know, debt to GDP ratio of the Japanese government is over 200%. And they've kept rates at zero. They were the first, you know, how can I say, people who started doing QE, the Bank of Japan, or money printing. And after 25 years, nothing's happening in Japan. And now the demographics of Japan is caught up with them. Japanese population is actually dying off now because it's an old population on average. And there's more people dying every year than there are people being born, you know, babies being born. So that's a problem as well that's caught up with Japan. And I remember back in the 90s, you know, people in Europe and in the US especially criticized Japan, their government, the central bank. They said you shouldn't interfere, let you know, the market take its course, let liquidation happen. And here we are in 2017, and Japan is still stuck in a recession, and its currency hasn't done badly, but you know, because the Japanese, you know, government debt is mostly financed by private saving or national savings in Japan. There's not too many foreign investors buying JGBs or Japanese government bonds. And what happens, you know, with the Japanese carry trade is that when the yen is dropping, like it has been, you know, since the 17th of April, it calms things down. It's a sign of, you know, market health, if you want to call it that. And that's why volatility is dropping to a 24-year low right now. And but one thing I have to say, you know, I would expect the Dow to be doing a lot better than up only 26 points here, especially with the dollar going up, you know, 0.2% against the yen. So, you know, in the old, you know, maybe a year or two ago, if we've seen the dollar rally so much against the yen like this, which means that the animal spirits of speculators and investors or the appetite is growing, you would see probably the Dow be up, you know, at least 100 points. So, yeah, there's been so many people, commentators, experts, billionaires, former central bankers, people like me, you know, other alternative commentators on YouTube talking about currency collapse. You know, Jim Sinclair has been speaking for 2-3 years about getting out of the system, taking our money out of the financial system. But the system keeps going. Why? Well, you know, things sometimes take longer to happen than, you know, people expect. I know the financial system is completely broken right now. It has been since 2008, and all we've seen, you know, since then is central banks just print money in massive amounts, trillions and trillions, out of thin air, to keep the financial markets, you know, assets, financial assets, elevated, to keep the banks that they represent, you know, the private banks that the central banks represent, to keep them alive, to keep the Western governments from imploding, to keep their the huge debt that the Western government, Japanese government have taken on, to keep them from defaulting on those debts, because we have so much debt that they need to keep interest rates at zero, and that's why all the financial assets are so elevated, and it has no reflection with reality of the economy. It's like their own virtual economy. The financial sector, the 1%, the people who benefit, the politicians, the central bankers, the big banks, the hedge funds, they living in a virtual world, while the rest of the real world, where people have to make things or service people or grow things or mine for things, that world is in a quagmire. And you just have to look at the emerging market countries like Brazil, Venezuela. So how long can this keep going? I don't know. It will go on for as long as it can. And there's that old saying, the market can remain irrational for longer than it can remain solvent. Yeah, so very, very, strange markets. I've never seen them before. I know I haven't been around as long as people like, Ron Rosen and some other people in the markets. But yeah, this is just eerie. And what will it trigger a total meltdown? I don't know. The thing is that people are getting more and more, when people talk about a crash or collapse or a crisis, people just roll their eyes, we haven't had it. And I think it will come when no one expects it. When it will come, I can't predict. But yeah, I'd just like to also say, cryptocurrencies are just like going up like a rocket, keep going up. Bitcoin, of course, right now 1,750. So doing really well. Another cryptocurrency that I'm looking at right now is Steem. That's been going up quite a lot as well, even though it's down 17% now. I think Steem is a good currency because Steemit.com provides a platform for people like me to post their videos and earn some income from it, especially now that YouTube and Google are kind of censoring a lot of videos and people are not earning as much. So Steem is a good one, I think. Ethereum, of course, has done well, but it looks like looking here at all the cryptocurrencies right now, Bitcoin still surging ahead, but I'm seeing a lot of alternative cryptocurrencies down today, like Litecoin down 3%, Ethereum down 3%, Ripple down 12%, Stellar down 26%, even Steem is down 18%, Dash down 12%, Dogecoin down 23%. So are we seeing the beginning of a correction? It could be. We could see people, selling some of their alternative cryptocurrencies and buying Bitcoin because Bitcoin is up today. And it's easier to, as I said in the previous video, Bitcoin is kind of the reserve currency of cryptocurrency. So it makes sense if you're going to take profit in these alternative currencies that you put your profits into Bitcoin. So that's it. Low volatility, complacency, no worries, seems to be the mantra right now for the financial markets. So if you enjoyed this video, give me a thumbs up, share it far and wide, subscribe to my channel if you haven't done it yet. And if you'd like to donate to my channel, there's some links below in the description. I'll talk to you later.